Yeah, we recording. It's live now.
Oh my god.
That's what you get, cause we went walking the other day. Q decided to be on. Oh my goodness.
They hurt. I was doing my workouts with my class, and I can't even do it. I can't even get down on the mat to sit down. It hurts.
Did you want to eat my paperwork? Who does that? Wild. Well, hello guys. This is your boy MC Fire.
An ice cube.
We are the Goofies. No, I'm just kidding. We are here today to talk to you guys about our trading journey. And
start over. That's candy.
I'm eating. I have to deal with it. This makes it more personable. Everybody knows we're human. We're not some just robots built in here. But anyway, you guys, beep. That's where we cut it and be like, beep. You guys are awesome, right? So, long story short, we are really excited because one of our plays moved pretty good today with the rest of the market. It was Meta. Now, the other plays that we have, like Palantir, Carnival, and Tesla, didn't necessarily do anything, but Meta did. So let's go take a look at Meta. Would you mind doing the honors and typing in META? Do you mind doing that for us? Awesome. Hit the enter key, please. Thanks. Nice. So, and we'll share it with you guys here in about 2 shakes of a lamb's tail. But what we notice, and this is kind of what we want to key in on, well, bam. We have a chart here of Mr. Meta. Now, you can't see it. I'll zoom in here. But I want you guys to notice the white line is what? The weekly trade line, right? It's the weekly rotational level. Now, where we got in is about right here. There's a little green arrow. We'll hide this here. We'll hide it temporarily just to show you that there is a green line or a green arrow kind of showcasing, hey, this is where we bought, right? And most importantly, we got in after it had already showed a kind of a retest of this zone. So it broke, there's a retest, it came down again, retested. So we felt pretty confident of taking this trade to the upside. So
To the upside.
First day went really good.
Yay.
Second day within 10 cents of our initial roll target, and then some pullback action, and then today it's up there, right? Very nice picture of power to the upside. Nothing to write home necessarily about just quite yet. We're gonna put these back actually.
I have a question.
Yes.
So, if you were to roll it and then it went down, what would you do then?
Great, very good question. That's kind of the beautiful part about rolling. If you roll it, right? If it as it increases and it goes up here, we roll. What are we actually doing? Well, can I show you the trade list real quick? So right here, if we're rolling it, let's say for example, this is the call side, like you're anticipating it going up. Put side, you're anticipating it going down, right? This is the cost of the contract at 25 days. Now, if you'll notice, this is $13.80, and it goes down from here as it goes up. This is $16.40, and it goes up here as it goes up, right? When I say that, this is the price over here, so you got to kind of think of it in reverse. As price increases, the cost to buy this contract or sell this contract decreases. Does that make sense? Okay. So the farther away from the money, out of the money it is, the cheaper it is. Okay. For those who don't know what that is, you definitely have to look that one up. Out of the money, in the money. You should know that by now. But anyways, moving forward, if let's say for example we bought this contract at 470. Strike price is 470. Got the ask on the buy. What is that? $37.55. So this strike price is where you bought, right? This is where your contract is. Now, where's the current price at? Well, current price is around the $500 range, 500 to 505 range. So there's a good difference between where you bought it at 470 and where it is currently. Now, there is a difference in value for these two options as well, right? At the 470 is 37.5, and at the 505 it's 13.80. There's a difference in value between these two.
Mm-hmm.
So let's say, for example, you have 3,700 or 37.55 as your value, right?
Okay.
And you're like, I could keep all of that $37.55 on the table in an active trade. Or I could do the smart thing in, because the market moves up and down, I want to stay in the trade to the upside, right? Because there's more potential to the upside. But I also want to lock in some profits, meaning I want to take some money or take some of my profits off the table. If I do that, what is the difference between $37 and $13? Right? You're looking at around roughly $24. So there's a $24 difference between the two values. So if I move it up to this, I would be paying $13.80. But since I already have value in this one, right, that $13.80 would come out of this, effectively taking $24 and putting that money in my pocket. So I bought here, and if you notice, this price is probably roughly around the same price this was. Just taking a guesstimate, I'm assuming that. But let's say it wasn't, right? Whatever the price I paid, it has grown as it moves away from that spot. Here's where our option is.
Mm-hmm.
If we go to ours, you'll see that from the price that we paid for this one, there's a difference between this price and this price. Okay, that makes sense. So we effectively have $8 on the table for these strikes, right? That's what I'm talking about. If we roll it up, we would be rolling up that value for the buy side. But you got to think also, we would also be rolling up potentially the sell side value as well. Okay, we want to keep that ratio, that 50-20. So that 50, you'd be buying this one again, and then on the sell side, you would be selling this one again. Okay,
Mm-hmm.
so the beautiful part is if it moves a little bit further to the upside, we could potentially roll it, basically we would want to make the trade break even. Basically, we want to take the risk of our trade off the table. Now, why would we want to do that here? Let's go back to the charts. We'll pull up a weekly chart. Now, remember our fundamentals. We see this is a very large rotational area on the weekly chart. Okay, the fundamentals are still the same on a weekly, 10-minute, even a 1-minute chart, depending on how you view the market. There is levels where buyers and sellers step in a big way at certain key levels, and where they do that repeatedly, you can definitely put lines there to show. Doesn't mean the market has to, but the market can retrace, test this level, and go up. It does it frequently, like right here on this candle. It went up, tested it, and fell away from it. Tested it again and fell away from it, back down to what? Nice support level. So why we bought here was because it broke this level on the weekly chart. We'll go back. It broke that level on the weekly chart, broke it, and as it came back and tested that level again, we felt comfortable getting in the trade, because if it breaks it to the downside, well, then it's a very tight, very juicy risk to reward. Very, very juicy risk to reward. We'll squeeze it in here. And you notice where we entered is around 585. So from here all the way up to maybe potential highs, it's a very nice risk to reward. 530 or a potential 528.50 is where it could get up to. So that's where my mind is well, how long did it take to get up there previously? Took about 2 weeks, right? Between low and high, that's about 2 weeks of price action. To go from high back to this rotation took about another half a week to a week. Same thing, 1, 2, 3. So we got potentially 3 weeks of movement, and we used previous price movement to kind of anticipate future results. Doesn't always work like that, but in this case, so far it's working like that. Now, if you remember, we kind of put the halfway mark as what do we call that?
The halfway mark?
Yeah, between your resistance and supply. It's something called FV. What do we call FV as a hint?
The face value?
Fair value.
Fair value.
Fair value. Very good. So where the market likes to hang out at, if it gets repelled from these levels or it makes multiple bottoms and it repels off, probably likes to hang out in here, right?
Mm-hmm.
In this time period, it was hanging out a lot in there, doing a lot of price action. So what we notice is if it repels off of this level, fair value, where it'd be the most liquid, the easiest to get in and out of contracts, it's right there. So if I want to roll it, it'd be a good time. So if people find fair value here, like right here, it comes up, find fair value, it could be due for what? Come back down. Yes, exactly right. And in that case, we would have taken some money off the table and we would still be in the uptrend. It would just be moving against us. Okay. But at that point, we would have taken our money off the table and we're in a trade for free at this point. So that's why it's really cool. We're literally taking our money off the table in that case. Really, really happy about Mr. Meta being up a substantial amount. Okay. And we'll go to some of the other trades, full transparency, that we're not necessarily up in a whole bunch. So CCL, it also went up, but not nearly as, we didn't get as good a price as we did with Meta. So if you notice right here, this is kind of where the rotation is at the bottom, right? On the weekly even. As it broke that, we felt comfortable kind of still getting in the trade to the upside. Doesn't necessarily mean that it will continue to the upside, but we've got a minor position in CCL. Now, the one we're worried about is Mr. Tesla here. Mr. Tesla, right?
It's always Tesla.
It's always Mr. Tesla, right? And we've been talking about Tesla for about 2 weeks now. Hasn't really made significant headway to the upside and has actually shown a lot of resistance after that big push. It started to falter and has just really been going sideways, trying to fight in this area. If you notice, between the support and resistance, it's kind of where we bought was kind of a little bit, I would say, shy of the middle, right? So kind of shy of the middle between this line and this line, high and low, kind of just shy of the middle. Not, this is where price likes to hang out at, whereas it'd be nice to have bought it like right here, or even right here, right when it was a little lower, breaking the 8 pair moving average and crossing above previous week's high. Now there was a gap there, so you couldn't get it exact, but on the pullback, it would have been nice to get that, right? Just be in a better position to the upside. So you want to get into where it's repelling. That's really where your alpha or your edge comes in. If you can buy it when it's being repelled from these lines and pushing into the zone of fair value, you can get out at a nice, juicy profit. But the overall market was looking pretty good today. You had like Bitcoin, it moved up a little bit, not too much. Remember, we bought here and here. Now, if you notice, we drew a line here where it is kind of in the middle. But this one's a little different because remember our buy trigger off the rotation above the 8 period moving average break of high. We took that assuming that it would test highs, and it actually did right here. Tested it, last couple weeks ago. So we're anticipating potentially a break of high. So that's why we felt comfortable averaging in even a little late. But it would have been nice to get in like down here. Really nice, like on this week.
Is that right?
I know, right? What about the Qs? You know what's going on with the Qs? Well, bam! Look at that, super juiciness. Look at all that juiciness, right? So the Qs, really, again, in the previous video, if you guys watched any of the previous videos, I kind of pointed this out that the Qs I could see kind of staying in this rotational zone. Nobody wants to be the sucker at the table, right? Nobody wants to buy necessarily new highs, but people know, hey, if we're looking at the SPY, if we're looking at the Qs, this is probably the best place to be when it comes to risk to reward that you can get, right? Everyone knows that buying the SPY over time, right? Buying the SPY over time is good for your portfolio. But when you look at it and putting it into practice, it's kind of hard to do that when it's at all-time highs. So the time to have bought would have been like right here, right? Green cross, you're getting a lot of buy trigger, aggressive buy triggers here, and then confirmation buy trigger here for the push.
So would you recommend people to not buy it?
I would recommend people to, well, that kind of depends on their portfolio, right? If your outlook is like a 50-year outlook, let's say you're a 16-year-old kid in his 20s, I would say you getting your feet in the market is the most important thing. So buying the SPY and being disciplined, I would say you should do that, right? Buy things that have the potential to grow over time to cement that habit of buying assets, right? Would I necessarily buy the SPY or the Qs right now? Probably not. But what I would be looking to buy is, and you bring up some very good questions, right? Let's say we go to XLRE, boom, real estate, and I'll tell you why. There's a mantra that's called buy low, sell high, right? So in the XLRE real estate, there is some underperforming stocks, but there is some performing stocks. Well is performing surprisingly well, and we'll open that up here. If I could see it. There we go. So well is performing extremely well in this environment. This is a day chart here. I'll switch it over to a weekly, but it's performing extremely well. Now, why did I pick well out of everything here? Well, one, even when the entire sector is down, well is up. So if you've got one in particular stock that is doing extremely well in a sector that is overwhelmingly down, then it definitely catches my attention off the rip. So I'm going to try to pull up here that bar chart. And if I pull up that bar chart, you'll see what I'm talking about. It is, do me a favor, type in bar chart right there. There it is, boom. So we'll pull it up for you guys, and you'll see kind of why I'm saying what I'm saying. Open this up here. So we let the data kind of steer the ship here, and the data is telling us the sector that is low right now is real estate, right? Right. So with real estate being so low and relative to like sector wise, relative to everything else, then this is a low thing on the totem pole. It's not necessarily, I don't know. Okay, that's a page. It's not necessarily outperforming everything. It's not necessarily going down. It's just lower than everything else. Yeah, it's just being okay. But so what's up and rolling strong? You got communication services that's going really strong, and you got tech that's going really strong. So let's say, for example, it could continue, but what's the mantra? Buy low, sell what? Very good. Buy low, sell high. So I, in good faith, can't tell somebody, hey, if you're looking for a long-term solution, buy at the highs. Unless you know something I don't, why am I buying at highs? It seems like common sense, but it's not. So I would either tell you to buy what's low or to buy what's in the middle of the road. Meet the industrial average, right? Just so happens that SPY is the industrial average. So the black line, that's actually your S&P 500. Can't get rid of that. That's the average. So would I say buy SPY at the highs? Wouldn't necessarily recommend it. I would say if you can be disciplined, right? If you had to buy something right now, buy XLRE. But if you're going to buy the SPY, if you're determined and just absolutely bent on buying the SPY, well, I would say do this. Wait till it takes a dip. Wait till the SPY actually gets to a point where it is juicy enough for you to just take the buy. And what would that look like? You can, any third grader can see, right, that this right here is a nice dip. So in the context of this uptrend, there is a period where it kind of sells off a little bit, whether it's news or natural forces in the market. Then as it starts to confirm coming out of that, I would take that buy. So yes, it still is at highs, but you did do what they call buy the dip. Buy the dip is okay as well. So would I buy at highs right now? No. I would tell them, wait, buy the dip. Even if you miss some upwards movement, trust me, you'll thank me later. So looking at XLRE, well, even at highs, I would take that because the sector overall is down. So there might be some fundamentals that make well very strong, even in a um, kind of a slumpy market for the whole sector.
It says it's a REIT.
Is it?
Mm-hmm.
See, and that's what I want to look this thing up, man. So we just bought a thing. We got to set it up called Qualtrum that helps you evaluate. This is not a plug for them. In no way are we endorsing them at all. We literally just acquired it, so we're gonna look into it. Really kind of excited about this because you get to look at fundamentals like debt to cash, your revenue streams increasing, has your dividend been increasing, stuff like that. Really fundamental stuff to value investing from like Warren Buffett. So that, and then when you see outperformers like this, I would be excited to say, well, what makes you so special? Maybe there's some fundamentals that make this company special that you would want to throw into your portfolio, right?
Mm-hmm.
Those lessons will be coming out. Like the value investing is next. That's why we're getting this, is to bring you guys, for those who don't necessarily care about technical analysis and looking at charts, you want to find quality companies that have very good balance sheets, good proof that they have growing revenue, right? They're low on debt. They've been growing their dividend, for a number of years, and their equity is either flat or growing. I think this will be a home run grand slam for proving that and bringing that data. Where some companies look like they're a good long-term investment,
Mm-hmm.
and they probably are not. So, good question. You asked, would you tell them to buy SPY at the highs? I would say no. I would either buy something that's at the low, like XLRE, or I would buy something like Well. That's an outperformer within that sector,
Mm-hmm.
as the sector is kind of getting beat up over there. So great question, actually. I really like the fact that you intuitively know, like, hey, like some people out there are like they don't know. And so with this one too, right? Some people would say, look at Bitcoin, it's at all-time highs. I would say On the contrary, I wouldn't be necessarily wanting to look at Bitcoin at all-time highs. But I'll give you a prime example of what I would want to look at that's close to highs. Let's say something like silver. Silver was recently at all-time highs, right? But then it had a nice juicy pullback. So something like silver, I would say, hey, it might be a good time to buy silver. It might be a good time to look at that as a buy. Make sense?
Mhm.
Yeah. So buying necessarily highs for the sake of them being highs doesn't make sense. But buying the dip, right? Buy the like if it rockets up here and it's this new high, I wouldn't want to buy that. But taking this dip here, I would want to buy that, especially if it intersects at this rotational level and you're getting a buy trigger. Definitely. Same thing here. If it intersects at a rotational level and you're getting a buy trigger, definitely would take a buy um, right there. That would be a very good opportunity to take a buy for sure. Makes sense? That's what I would advise the young lad or Miss Ma'am to do.
Okay.
Last but not least, we'll look at the dollar, what the dollar's doing, and then we'll look at oil. So cool? Cool. So UEP, the dollar, right, essentially, um, I would say it's kind of in an uptrend. Now, it depends on how you look at it. That could be a metric for how you view the market. Are people running to safety? Or people not necessarily wanting to get assets, right? That also could mean, hey, is a central bank, flooding the market with a whole bunch of money? So if they do that, you're diluting dollars, the value drops, and people necessarily want to spend it as fast as they can, right? So this is kind of what I see as middle of the road. Really can't determine, but I will say that it's below this previous peak high, right? It's below that, so hopefully it stays below that. The reason why I say it stays, I kind of want the dollar to kind of stay in this area, is it gives the market time to adjust to monetary policy. When I look at the dollar, I look at the 10-year treasury, I want those things to start flattening out so the real market, like people's everyday lives, can adjust, right? This is kind of what I view as a inflation metric.
Okay.
Yeah, so also, you have oil, right? The price of oil is the same thing. Don't necessarily want this to be going sky high because that means the price of light sweet crude is going up. So the fact that it's coming down for the overall everyday Joe, that could be a good thing, right? But for the markets, depending on what side of the market you're on, could be a good or bad thing. So staying kind of in this range and noticing that it's in this range, again, it's another one of those things that, hey, if the young man asks me, would you buy SPY? I'm like, I look at some other things, like maybe oil, right, in a rotational sense. If you can get a nice juicy rotation out of oil from up here and then falling back down to this level and then pushing back up, right, lock in some profits or whatever, it'd be a good time. It'd be a good time to maybe take a look at the position if you get a buy trigger. So for sure, look and don't. I wouldn't say like you can't be lazy with these kind of things. You have to say I will be patient, really be patient, and just wait for the price to come to me. Okay, wait for the price to come to me.
But what if somebody feel like they need to be in the market right now because like they have like bills to pay and they're like, well, I need to make this happen now.
Okay, if that's the case, and I would say to that person, this probably isn't a vehicle for you. If you're looking at the market as a way to necessarily pay your bills, you have one of two options. You either, before you put your money in the market, you should go get the skills first, right? So if you have bills to pay right now, it's not going to help you. because you need to develop the skills. You might get lucky, but you know what they say about gambling, the house always wins. But if you're the person that says, hey, I want to pay my bills with this and I'm willing to learn the skill set, get the proper tools, then I would say this is for you. Now, if you're the person that says, hey, I have bills to pay, but I like this and I want to do this, and you can be disciplined, I would say by all means do it. But it defeats the purpose if you're putting your money in and taking your money out. You want your money to grow, compound, have that effect of growing over time, and using proper risk management to grow your account, right? Because just like when we do, let's say we got Meta here. If you go to Meta and let's say, okay, it goes up a little bit and I want to pull it out.
Yeah.
Well, it kind of defeats the purpose of it because that money doesn't have any opportunity to grow. We could take it now, right? Decent profits. But if we take it now, then that money can no longer work for us into the future. Okay. So I would say if you're looking to like pay bills with trading, there's a right way to do it and there's a wrong way to do it, right? Doyle actually broke this down in one of his videos. He was like, if you can place a trade, this is how you know if you're ready to quit your job with trading. And this is a really juicy nugget for you guys. If you guys want to pay your bills with trading, I would advise that you have at least 6 months to a year of living expenses saved up. Not in your account, not actually like in a trading account, like 6 months to a year actually saved, right? To buffer some down months or down whatever, right? Then I would say, even then, I wouldn't even quit your job, right? That's not where you quit your job. The point where you actually do get to quit your job is when you have had 3 months of consistent profitability trading. 3 months, okay? In 3 months at the level of like the first week of trading, like once you've completed the first week, if you've been profitable, that pays your bills for the month, right? So you're not looking to say, hey, this is the last 3 days, this trade got to work or I'm screwed. No, you need to be, the first 5 days, I've made umpteen dollars, like 4,005, but whatever your expenses are. And I'm good with that. So if I get done with trading for the week, I'm done. And if I don't hit my mark, I have 3 weeks to potentially do that. Because you're gonna have some weeks where it's just gonna be a bad week. You might have 5, 6 bad trades in a row, right? So it's something to think about. It's not always gonna be a cakewalk, and you have to not have the pressure. It's really emotional, and if you're emotional, you will lose a lot of money really fast.
I noticed that there's a lot of videos on the internet or even on YouTube where people are saying, well, yeah, I spent my last $40 and then I was profitable $10,000, and then that like reels people in to like get started on this journey, and then they start losing a lot of money, and
yeah,
you know,
and they'll tell you that, like, if they're being honest, most of the time that's exactly how it happens. They'll be profitable. Let's say they jump into forex, high leverage. They'll make like thousands of, they'll, like you said, $40 turns into, let's say, $5,000. They quit their job. They
I'm gonna do this full time.
Kiss their boss goodbye, like in a very non-equitable fashion, right? And then from there, what happens? They're having to like go back and get a job. Maybe not the same job, but go back and get a job.
And then think that it's a scam and that doesn't work, right? And all this other stuff.
They didn't get the skills. They didn't appreciate the discipline. And they just thought it was a get-rich-quick scheme. Right? They thought that nothing in life, trading is no different than anything else in life. You're going to have to put time and energy in. And a lot of times, the market, your lessons in the market are, you pay that with money, literally for the learning and literally for the pleasure of learning the markets, literally for the emotional roller coaster, you pay for that. in the markets with risk management. So it's better to do that small and work your way up and be disciplined. Those guys that have take pride in doing this for years, man. So definitely take pride in that. We've been trading for or investing in trading for about 2 years, and there's so much for us to learn and apply. We're still finding really quality tools and really finding our alpha. Um, but I think we found some really good mentors. So
Yeah, along the way, just investing in mentors. Remember that you can't get there by yourself. You can get there by yourself, but it's gonna take a lot of failing, a lot of um, lost money and things of that sort. But with mentors, you get to pick their brains about how they failed and how to avoid the failures that they've had. And if you have this like daunting question, well, how do I execute this, or why would I want to do this instead of this, or why would I want to look to this market instead of this market, they can answer all of those. Remember, your mentor kept telling you get bigger winners.
Get bigger winners. Like, yeah, he kept saying, "Yo, get bigger winners."
Because every time he was in profit, he was like, "Okay, I want to pull it."
Yeah.
And the mentor was like, "Why?"
Yeah.
Get bigger winners.
Get bigger winners. So he would say like, "This is how he told me to calibrate." Besides get bigger winners, he was like, I was using the smaller time frame chart. I was like on a daily and like a 10-minute and 2-minute. He was like, "Why? Why are you on a daily? Why wouldn't you be on a weekly? If you want to get bigger winners, you probably should be on a bigger time frame." And I was like, "Oh." It makes sense. He says, "Okay, you prioritize what? Strong uptrends, then strong downtrends, weak uptrends, weak downtrends." So he gives you a structure, right? He gives you rules. And then from there, he tells you how to define those structures. And he tells you what proper risk management looks like. Never trade over what's your max drawdown, right? It's flexible to you, right? Your max drawdown might be 50%. Our max drawdown was 20%. So he's like, okay, take those 20%, take the 20%, divide it by 8, right? So typically you're not going to have a string of 8 consistent losers to give an edge, but it can happen. So for the worst possible scenario, you can have 8 possible losers, which will give you 20% drawdown, which is within your risk tolerance. If you can live with that, cool, right? And from there, just taking his wisdom, especially for get bigger winners. Those words are like, like crazy. Just rings, yeah. Like we hear his voice when executing the trade, right? So it makes me not pull it off the table, but if you're concerned about it, then roll the trade, take your risk off the table. Now you're in the trade for free. That was really powerful, especially for me, because it's almost like if you're going to the casino and you can't lose any money, how long would you play in the casino, right? How long would you stay in the casino? So they're not saying this is gambling by any means, but it's an equivalency that emotionally people will understand. People will understand what it's like to be in a good favorable position, and if you set it up to where you cannot lose, you understand that, yeah, I would want to be in this position extended period of time. So guys, we really appreciate your time. If you like this one, I would definitely check out some of our previous channels. I did do
videos.
Yeah, previous videos. Thank you. We did do like a live trading session where it basically was like a break even, and then we placed a trade that was profitable. If you guys saw that, give it a thumbs up, man, because I don't normally day trade, but when I do, I kind of share it with you guys. I'm not really good at day trading, but I think that it is for the guys who are good, they make a lot of profits very quickly. But yeah, again, you have to respect the discipline, and you have to respect the rules and the skill set. So thank you guys. This is your boy MC Fire.
And Ice Cube.
We appreciate you guys. Have a good day. Goodbye.
Shalom.
Peace.